Hey guys, it's Brian. Today I'm going to talk to you about May, June, and July, sort of recap what's been going on in those months. I haven't really shared too much about it, but the main reason why is because there wasn't many lessons to share in that time. And while I did kind of pick up steam and see sort of the lessons that I could share, I wanted to wait until the conclusion of the month so that there could be a complete arc, and I didn't want to leave you guys hanging. So I feel like this would be the best way to present it. So let's just go ahead and jump right into it. Okay, so here's the big picture. In my entire career, starting from 2000, well, not from starting from 2019, but after I blew up, I restarted my account in 2019 with $30,000, and that's at the very beginning of this. Every single point is about a week. Now, obviously, it looks really ridiculous now. The main points we need to think about are towards the end, so I've highlighted them here. So, as you can see, starting in May, I basically ended up break even. In June, I basically ended up break even. And in July, I really catapulted ahead in a big way. Now, during that time, my average stats were around 4R. Win rate was hovering between 20 and 25%, which is pretty normal for me. And the green days are about 55% of the time. So hopefully that kind of helps illuminate for the people who are newer to my feed, like kind of how you can still be very profitable with risk reward in mind, understanding the relationship between that and win rate, and just things that I always kind of harp on. Now, what you don't see in this big picture because of the outcome is the journey that took place in that time. And specifically, if you look in the pink zone, I actually went through one of the biggest drawdowns that I've had. Not in the big picture, in the big grand scheme of things, it wasn't too dramatic, but in the moment, I assure you, like a drawdown for anybody is still very torturous and very difficult. And, truly, I didn't really know if it would continue to go down. I really never had, since the revision of my system, my strategy, everything like that, had like such a dramatic pullback. So I definitely want to highlight that. And I definitely want to highlight what were the steps that I took to overcome that? Why did it occur? And maybe it can be helpful for you. Okay, so here's the big chart, and this is something that's probably going to be really crazy. So back in November, you see that big red loss. Now, what happened in that situation was I started focusing on money, and that for that reason was because I had just established like my business as a trader. I wanted to meet some very ambitious quotas. I had to, I was juggling multiple accounts, trying to see if I could micromanage, multiple brokerages at the same time. And all in all, it was just like I was just so focused on the money. And I had like 3 months ago where I had to really push it. I had less time than I actually really thought I had. So, that month just kind of shook me. But I knew immediately what needed to happen in December. I do have a recap on this, by the way. In December, I decided let's not focus on the money more. That money you lost is gone, and let's just recoup it. So I pretty much made that back. Now, in February is when things got really crazy. This is where I had my best month by a mile in terms of, risk reward, opportunities, being in the flow, everything. So that was my biggest month R wise. But you can see here that in July, I almost beat it. This is my second best month, but only with about a third of the R gain. So that's just showing you kind of the progression of my growth and how I'm kind of pushing myself P&L wise. But the opportunities are definitely not the same. So that's something to keep in mind. Now, I want to show you guys that during this June season, I actually drew down minus 83 almost R in the first, 2 weeks. And that was, to me, that was a shell shock. I had just come off of this like little May where I was break even. And that was, being break even means that it's not that I wasn't making money, it was just that I couldn't hold on to it, and things were just kind of unraveling a little bit, so I was basically fighting. But the highlight here is that in June it really started to hit hard. So I just kind of superimposed what would have been the red drawdown on that first 2 weeks, and just to kind of get you into my head there, my mentality. So obviously I'm not happy with that. It's actually really ridiculous that I felt like I shouldn't have to, not have to, but I shouldn't, as a trader with the kind of experience that I have today, like this shouldn't be possible. And well, I surely was in that position. And there was a couple of things I really need to learn here, specifically with humility, but we will get into that. I just wanted to show you like how bad it was. This was literally on par with some of my best months in terms of how am I going to recoup this. And like I said before, I did come out of that month slightly green, but I was red on R somehow. So how does that work? We'll find out. All right, so let's go into May. May was coming off of the highs of February. So you saw I had that huge, big month, and I had thought that I got to the next level. So basically what I did was I tuned my system to be more and more aggressive. And as you guys know, I talk about this sometimes. Going for more does not always equate to better results. And someone like me, I don't really have too many people to look up to in the space of R's and how far I can push it. At this point, I'm basically trailblazing the way for myself, or I have been for quite some time. So in my view, I wanted to see how far I could push it. How big of the gains can I get compared to the small losses, and can I manage that? I knew it was going to be very difficult, very execution based, but during this time things were going so well, and I decided, you know what, I'm going to up the ante here. I'm going to start, playing more aggressively. And at some point, statistically, when your win rate drops too low, it'll become suboptimal to increase your risk reward versus someone with a very fair win rate and a very fair risk reward. So knowing that and keeping that in mind, I'm very much experimenting, and I am coming off of some very good months. So I felt like I was in a position where I could take some risks here. The thing is that not all risks pay off, obviously. So as you can see here, I'm just listing off from February I had 295 R, then the next month, March 132, April 114. So the results are coming through. I was saying, the market's slowing down a bit. February was as hot as I've ever seen it, really. And now it's time for me to say, hey, the system is performing. It's just these months are a bit slower. Let's wait till that next spark or that next month where I could, potentially rival this best month of mine. I didn't expect it to come soon, and that's not something I was thinking about, but I did believe if I had a good opportunities, this would be a possibility again. So as I'm progressing through this, I'm experiencing growing pains, and part of that is as you're getting bigger in size, you're going to have to be more selective. And the reason for this is because there's not always opportunity when you have liquidity concerns, or when you have when each mistake is punishing you to a larger degree. So I went ahead and tweeted here on this page here. It's a much larger thread. I really recommend you guys look it up. It was very popular. That basically the edge is there for newer traders or traders with small size. You can take plenty of opportunities that will actually recoup your day, end up being your best winner on the day. You can be nimble with risk management, so less slippage, and you can make a great life. Honestly, up until this point, I really not have much problems with that. And so, that's something that I am dealing with today, where I'm now having to pass up opportunities that I wouldn't have passed up in the past. And this is trader maturity. The problem with that is it offsets the results that you typically would get in the past because you're omitting trades. not because they're edgeless or like technically you should trade all the setups within your system with edge, but because of liquidity constraints of the market we're trading, at some point it's just not a thing. But I will say it happens very late in the game, and it's not something that a lot of you guys should really worry about. I really think that you should take advantage of all the opportunities you have, grow your accounts, and the maturity will come at some point, but it's not like just because X trader can't take it doesn't mean you can't. Just because you have the ability to do it. Let's just take advantage of this now. So basically, because of the systematic trades not being taken or omitted, it offsets the results overall. Now, that's not something that I really expected to learn, but having more and more focus and emphasis on the best setups is likely, the future. And I have talked with a lot of great traders like the Short Bear or Lucas. And, talking to him, you basically want to think like, this guy's an amazing trader. I wish that I knew his magic, secret. But literally everything he's telling me is the things you don't want to hear. It's, he's not saying it exactly. He's not saying explicitly to be humble, but all his advice is the foundation of trading. These are the basics. These are things you really need to pay attention to. You cannot just force and impose your will on the market. You have to let the market give you what it gives you and be happy with that. You have to take the best setups. You have to adapt to a market that is changing and has changed since COVID era. Lots of volume, lots of traps, more opportunities for bigger players to come in. And so, there have definitely been more sharks, I would say, more bigger impact players or collectives, really, like chat rooms, who can impact the market in a big way that we have not necessarily had to deal with in the past to this degree. So adapting in these ways is something that's very important, but it all really comes back to the humility of it all and recognizing that, this is, you have to respect it. Now, I'm just going to give you one example because that might be a little vague, but essentially, levels that typically would be respected in the past, like let's say a very large volume day, being gapped up into that area, the bounce short, the VWAP Boulevard, whatever you want to call it. These levels are not always on point. A lot of times you have multi-day runners that are building up steam when the companies are actually legitimately completely terrible. You have a lot of bag holding longs actually ending up on top by not selling their positions, only to see the stock double the next week or the next day. Reversals, halting, everything. You know what I mean? So there's a lot of things going on within the market, but we're going to go ahead and take a step back because I'm skipping ahead a bit, and let's go into the market dynamics below. So we have this COVID era that ignites the market. Everyone's trading, everyone's into it, right? We don't think that anything can be better than 2020. I mean, 2020 was just insane, right? Well, come January 2021, we have this explosive start. Everything is just going haywire. Everyone is buying into the market. There's so much excitement. There are memes. There are like people coming in with a totally different mindset of diamond hands, whatever it is. And, that changes the market. That changes the excitement. That changes the way that people are shifting the money around from sector to sector, and even how small caps are being affected, because a lot of those retail traders love small caps because that's just one of the ways that they feel like they can double their money quickly, But obviously all good things have to come to an end for the exuberant. And well, all the memes ended up crashing. And so we had a lot of disillusionment within the greater market sentiment. And that was with a lot of the new traders, a lot of the traders who haven't really experienced the market to the degree that maybe some of us have. And they say, oh, this, they make up terms. They make up short laddering. What does that even mean? That's not even a term. Oh, synthetic shorts, whatever, and the market is controlled, whatever it is. And they don't take any responsibility for the fact that they're buying these pops, and it's basically like a Ponzi scheme at some point, where you're gonna tell your fellow diamond hander to hold because that only benefits you. Uh, you want more people to buy, and it's a complete mania, complete frenzy. Thing is, when it died, there was so much disillusionment. People are like, "Screw this! This system's rigged." And yeah, the system is rigged. It is completely rigged, but like they have no maturity. They just want to come and get rich. Well, that's reality. Now, what started happening? Crypto started creeping up, right? Crypto creeps up. People started getting excited. People start pouring out of the market looking for those memes. Think about Dogecoin, literally the market leader in terms of percentage gains, everything. The creator himself says, hey, this is a complete scam, or this is not a scam, but this is not like a legitimate investing vehicle. I have no idea why you would invest in this, but of course, we have this whole new breed of memery in another market. It moves way faster. People feel like it's detached from the centralized institutions, and this is the people's thing, and shit coins pumping, less regulation. There's like so many influencers getting in on these plays, and it's quick money if you really play to it. And I think that people didn't really necessarily think they're always great investments. Sometimes people are like, hey, you know what? If I get in before the next guy, I can probably make a quick buck, and that they probably did. So there you go. Crypto's going up. Everything's going strong. The money's moving out of the small caps into crypto, and everything's going up, right? Now, what happens during this time in May is because everyone is just, finding their way to crypto. Well, the market enters one of the slowest periods that we've seen in 2 years. Now, this was very normal in the past, right? Like, it's very normal for like different seasons, like earning seasons, for example, or just seasons where things are not really running, so there's not much excitement in general. Where maybe it's summer, things like that, where people are just kind of not trading. There's not much opportunities, not the things really moving, etc. So, for a lot of us coming from 2020 plus, I don't think there was much slowdowns whatsoever. So this is a new thing for a lot of new traders. But also, a lot of us experienced traders got really spoiled as well. So what happened was neutral market phase, which is something that basically describes, no one's really winning up or down. And it's anybody's ball game, really. I mean, there were moves, of course, but the edge was not really there. And so during May, this break-even month, I basically chopped around with a system from February that I had adjusted, thinking that I was going to, do well. And what happens is I'm forcing setups, I'm forcing trades, or I'm forcing edgeless opportunities and just trading the trade. So naturally, my result would not be so good. However, because it was the first time that I kind of slowed down coming from those, 3 months above there. Well, it's the first time I've had like serious adversity. And well, in my mind, I noticed that there were some serious flaws, but I could always look at the market and say, the market isn't really where I want it to be. And so that leads us into the next month. I just want to show you some graphics from ADF. During this time, you see, and after April, basically, the interest in penny stocks is just slowly fading. And conversely, or inversely, cryptocurrencies are skyrocketing in interest. And this is an indicator of essentially a shift of the public perception. Okay, so in June, June was tough. Now, in June, the first 2 weeks, I had drawn down 83R. And if you recall, that was almost one of my best months, really, but as a loss. Um, what happened? In the first week, I lost 57.7R. And in the second week, I lost 26.29R. Now, June in of itself, things started happening again. There were more setups presenting themselves, so more opportunities for me to like try my system out. And I wanted to give my system sample size. Just because May didn't turn out the way I wanted, I still believed that I needed to see a market that was more resembling like a normal, typical market environment. So I wanted to go ahead and just try my system out. Well, the thing is, after May, I had gotten like a pretty clear amount of samples, and I was starting to see the cracks in my system. I was starting to see that February was just a very good opportunity, and my system, as aggressive as it was basically fitted for that type of environment specifically. And what happened is, once I started facing adversity, massive adversity, my system couldn't handle that, the pain. Basically, I was allowing myself to draw down more. Not that I was being riskless, like I wasn't widening stops or not respecting my rules or anything like that. It was all built into the system, but my risk tolerance in the system led to larger max losses, because inherently when you go for more risk reward, you're going to probably take more losses in general. And the trade-off is that when you catch the move that you intend for, then it will more than make up for it. So that's essentially what got me through this new system. But I recognized after a week like this, I was starting to feel really bad, because I've just gone through a month and then an initial week of just complete and utter failure. And to me, that was unacceptable. So what I had to do was I had to say, hey, look, this happens all the time. I mean, this has happened to me many times in my career, where I make a system, like I make a system adjustment, I try to improve it, and I have to let it play out. So I give it sample size. I have to, deal with different environments, etc. I can't just give up because things are not going well. Thing is, once it proves to me through the samples that it's not going to work, that's the time to look at it and analyze, like, where did I go wrong? Now, what I had realized during that time was I was simply allowing myself to draw down too much, and I was being far too aggressive, expecting great results to bail me out of situations where, like my big losses would be easily overcome by big wins if they ever present themselves. The problem is, what happens if you never win, right? The market can do that to you. So under the stress test, I was pretty much hitting the limit of exactly how many days in a row I'm supposed to be taking these losses and red days. And week one proved it to me, this is not right. So I pretty much went back on that system. I sized it down to be less aggressive, but I wanted to maintain the elements of what made it great in February. So what I did was I reduced and capped the maximum drawdown that I would accept. I reduced the amount that I would add onto the system, so I would get less risk reward in the end, but still more than before. And I would also revise the timing. So I was very meticulous about saying, hey, you know what? If it looks good at this certain time of day, let's say like, after 40 or 15 minutes of the open or 30 minutes of the open, if it's still looking good, then I can add, instead of like adding beforehand and then sinking deeper, hitting, a wall where like now everything is just pushing into the levels that you really wish you could have shorted at, but instead you had max lost out because you were, sizing in too big. on those key levels, but now you also have this environmental factor where those levels tend to break, and it always goes farther than you think nowadays, or it will break the levels you care about. All right, so with that down, I had my system revision, and in week 2 I had drawn down 26.29 R additional. So at this point I'm feeling very, completely shitty. um I realized that I had thought of a concept long ago, which was compounding down but not up, because I had, starting in this earlier part of the year, I had started freezing my risk reward, or freezing my R, sorry. So instead of increasing my R at that 1% or less than 1% rate of the account value, I decided to freeze the R and just keep it there statically. The reason why is because I don't think that you're supposed to infinitely compound. I think that you're supposed to use it to grow your account, and it's really amazing at that. But at a point, the money becomes very substantial to you, and you have to identify with it and believe in yourself, understand the numbers, understand the drawdowns, understand the profits, pay yourself a little bit, enjoy it. It's not a race to the finish line. Like, you can take your time and develop the emotional intelligence around that so that you can 100% execute. You need to be able to execute that size, which challenges you in many environments for, multiple days, weeks, or months, depending on where you are mentally. Now, going back to the compounding thing, I had realized that early in my career, a lot of my blogs, I talked about how with compounding, the it's not just upside, it's also the downside. When you start losing and you start sizing down, it actually makes it so that you're earning your size in a sense, because fundamentally the way that you're trading, the results you're producing will impact how big you're going into the next day. Now, when you're having a drawdown, for example, you're actually increasing the span of the attempts that you have. So let's say that you're risking 1% of your account and you're compounding it. If you held it static, if you lost 100 times, you'd be out of the account, right? But if you compound it down, every single time you lose, you're increasing the amount of attempts you have to your risk of ruin. So it's actually much more than 100 attempts. You see what I mean? And for that reason, it protects you on the downside, and it's a very, very powerful tool defensively. Now, this is something that I realized, like, I need defense. I went all offense. I was maximizing my system. I was holding static. I thought that was good enough, but no. If the market continues the way it is, I cannot just bleed my profits. I cannot bleed my account away. And I certainly did not want to wire back in the account, which I actually had to do, which was one of the biggest wires that I've had to do since I started my account. And, I was priding myself before on the fact that I never had to really wire back in substantially. And it was a very small percent of the amount of wires going in and out. Like majority, like 95% of my wires are banking it into my own account and not going back to the broker. So, of course, after having week 1, I dramatically sized down, dramatically. I would say it's probably half of, what I wanted to be risking, but I decided, like, this is the way it's going to go. If you're as good a trader as you think you are, you're going to humble yourself, you're going to size down, you're going to, flow with the market, you're going to trade your best, and you're going to earn your size back. So in this way, I was able to regain and recoup and re-attack the month, having drawn down a significant amount of money that definitely meant and a lot to me and hurt me psychologically. The good thing about this is I finally had a plan. I had something that I could do to, attack this month. I had a system that I had much experience with and that I believed in wholeheartedly. And now I was pretty much coming back to my roots. I was coming back to the things that made me successful. And ironically, it was the thing that, people don't really think about, which is just sizing down. So coming into that week, sizing down, I definitely stemmed the bleeding. And as you can imagine, when it's minus 26.29R, it's now not the max size and it's a smaller size. So that does play a factor in the way June went. Now, on the third week and fourth week, I had a massive recovery, plus 65.67R. So not entirely eating up the drawdown, but I was on my way back up. And what happened was every day that I was winning, I remembered and I felt it again. The wins were so, big because we're betting asymmetrically. Like you lose in R, but you win 3 plus 5, 6R, right? The next day I was just coming back rapidly into my size. And because of that, because of the self-belief of the process and the tolerance that I had built through taking these larger losses, dealing with bigger numbers, bigger drawdowns that I ever had, I actually pushed my limit there. And from that week, I actually increased my size in a compounding manner versus the static that I had put on. So I actually outgrew myself at that moment. And because of this, I was actually net minus 16.5R on the month, but I was green in PNL. And that's because I compounded my R up and eventually the money overwhelmed the R factor. And this is the power of compounding. Like, this is something that you don't see. And this is something that kind of sparked my enthusiasm and the idea in my head of like what story that I wanted to tell. Like, I could feel myself coming back into my form, coming back into the things that made me successful, dealing with the adversity, enduring this market, enduring my own shortcomings. And, I rewarded myself by getting a Rolex Deep Sea. And to me, that'll always be a symbol of endurance and of resilience and just being grounded because, it's a real big chunky watch. It's very heavy. It's super resilient. It can go to the bottom of the ocean. It's waterproof. I mean, this thing is a tank. And that's pretty much how I felt like the last 2 months were. So this is something that I'm going to love and cherish and look to when times are hard and just remember the lessons here. And these lessons really just made me a better trader. And of course, you saw the final result in July. But, think about it at this point. I'm having a break-even month on May. In June, I started out real terrible, like super bad. I mean, you talk about showing up to work and losing money. That's something that a lot of people don't have to deal with. It's just a trader thing, right? You can show up, you can put in all the effort, and you can lose. And that's how it goes. But the thing is, you don't know if you're losing because you don't always know if you're losing for the objective reasons or if it's something more subjective like your mentality, your systems, little kinks and glitches that you didn't really think about, or just the pure sample size of it all. And of course, growing out of your system in some ways, just trying to spread your wings. And, the unfortunately, the later you experience these things, the more dramatic they will be. So like, it's bigger P&Ls, everything like that. But the goal, and this is why I always tell people, look, you need to start small. You need to risk like responsibly, grow your account, earn it, because you want to learn these lessons. Like you want to learn them early in your career. You would rather blow up your account with $10,000 than when you have $200,000. You know what I mean? Because you come back stronger every time. So to me, this is going to be one of those. These are going to be one of those lessons at the higher levels that I'm going to look back on and say, like, this was a turning point. This is something that was really important for me. But of course, I wish I had learned a bit sooner. But it is what it is. Okay, so I just wanted to illustrate a little bit of the mania and have a little bit intermission here from the serious stuff. So let's just look at Dogecoin. Dogecoin, this was basically, if you look at the chart below, April 2021 through July, this is when the crypto mania pretty much began. And the neutral market was really punishing a lot of us traders who are trading directionally, because you're trying to trade the big picture and you have no edge necessarily, no follow through, no volume, not enough setups, whatever it is, and you get chopped up. So look where all the money went. It went to Dogecoin, went to Bitcoin, whatever. And you have people like this guy Pro to Doge, who puts in, almost, I think it was like 150 or 200,000 in Dogecoin, just going all in his whole savings. And at one point, like towards the top of this range, he's up $2.5 million. And you have here Graham Stephan trying to convince him to just take a bit off, like you're going from someone who earns less than 100K a year in your 9 to 5. You can change your life. You can invest that money. You can, take care of yourself for the next couple of years and trade responsibly. You have basically won the lottery. You have people like this, and they refuse, and they believe all of a sudden they are, savants at trading. They have just started trading within the past year or two, and they got lucky, and this is happening a lot. There's a lot of cocky traders out there. They think they understand little details like, hey, forward-looking events. Like this guy's on the podcast saying, look, when Elon goes on SNL and he talks about Dogecoin, it's going to go to $1. Like this is what's going on in his mind. And sure, what do you know? The next day, Elon talks about it and the price tanks. Elon talks more shit about Bitcoin, Bitcoin starts tanking. And look at where we are now today in July. This guy is up over $2 million, and he's lost almost $2.1 million in a span of 1 month. It's not going to kill him, obviously, but I'm just saying, this is what has been transpiring in that time. And it's honestly pretty ridiculous if you guys want to watch that podcast. It just, the way that he talks is essentially how you would imagine your average Redditor coming into trading and just thinking it's a completely easy game, because it's not an easy game. Traders who are professionals take losses. Traders who are professionals have moments where their psychology is broken down, where their systems are tested. They don't have all sunshine and rainbows, So this is, it's just unbelievable, but it's fun. Okay. So let's talk about July now. This is the present moment. Now, after this neutral phase, heading into July, we have this actual bullish phase. Now, a lot of the sentiment comes out of Bitcoins and cryptos and comes back to the market. You see rejuvenation of some names like AMC. You just see overall more setups happening in the mornings on scans, more volume. You can truly tell people are hyped about the market. You have multi-day runners. I can't name the tickers in particular, but I just remember there was a ticker that was just grinding everyone out for days and days and days, and it was a piece of crap. And people were getting blown up essentially, and that's kind of how bull markets in small caps start. Somebody's exaggerating the price by being too aggressive on the short side. Bulls are jumping on that. People are blowing their accounts up, and I can honestly say this was a very tough month. It was not easy. And if you look at the charts I sent in the beginning of the presentation, you would think it is easy because look, wow, look at what a recovery. But no, it's not. And we're going to go into that right now. So I had returned to form. I was resilient, and my system was more and more stable. Now, I want to say that during this time, it was really tough, but not for everyone. It was tough for the bigger picture people because the factors I listed before, like halting, bigger player impact, even algorithms, you could really see that both ways. Specifically short, actually, most of the time this month was high of day breakout, fake out, technical chart breakout, fail. You would see key resistance levels with massive supply being taken out, only to slam back down. But that was more towards the later half of the month. in the beginning half of the month, it was really like those breakouts were working, those technical levels were working, those resistance breaks were working, and easily you could see that lots of shorts are uncomfortable, lots of shorts are blowing up for sure. So I'm, whoever's here right now, just like I said in the Stocks Trade interview, if you made it through some of these environments that we've had in the past 3 months, you should be proud of yourself, because that just shows that you have a system that is robust against some of the like shittiest action, really. Not only that, but there are going to be people who are going to be profiting during this time. But I will say, if you have a bigger picture idea, like one of your wins can be a culmination of all these little, little wins, little wins, little wins. And it's very misleading where people are, shouting from the rooftops of their success right now. But it doesn't really, it doesn't impress me as someone who kind of sees like the bigger picture. And it's not to shame them, but I'm basically want to say, like, don't necessarily buy in to everything that you see, because there are a lot of traders who say they're doing great now but weren't doing great before. And a lot of the systems that I share with people is meant to work for the average person, whereas like a lot of these higher frequency trades are subject to like massive blowups, revenge trading, huge emotions. It's very hard for the majority to execute, and they're usually perpetuated by players who are not as big as well. So what happens is, like, in my view, you should try to learn from the best traders, like fantastic traders, and skip over good traders. Like there are good traders, but you want to aim high so that you can fall somewhere below that level. Like if you aim for great and land at good, that's perfect. If you aim for good and land at worse than good, that's really bad. And so it is so misleading, and I wish that I'm not really the person to do it, but there has to be some sort of discussion around this. I just want to make sure, like, at least my followers understand, like, don't believe everything you see. There's a lot of bullshit out there. Like, there's so much bullshit. Okay. All right. So halts and reversals, so many halts. I mean, there was a day where every single gapper halted up within 15 minutes of each other, only to just slam back down. Or just, I mean, yeah, sometimes they would go, but like most of the time it was complete bullshit. Most of the time it was a fabricated move, and to stay in those trades is very difficult. And then one of the things was that they would halt up and then literally halt back down, or just slam down that same instant. So if you're a risk manager, if you value risk, a lot of times you're gonna get stopped out there, but have no way to get back in the trade. And if you did, the risk reward was very poor because of the price parabolic and the parabolic flush. It's very difficult. So you have that as one thing. The second thing is, you're a big picture person. You want, majority to move, and it's not greed. It's part of your system. That's what I do. That's what a lot of my friends do, and that's what people, that's what people can do, generally speaking. But so many reversals. I mean, like every dip at some point in the morning, like, will rip. Again, all the high days breaking out, technical levels breaking out, going to the extremes. I mean, again, you would basically, if you're managing risk, you're gonna have a tough time, and if you're going for the big picture, you're gonna have a tough time. So I really saw some very trashy action, definitely manipulated. I'm not gonna say like I wasn't upset by it, but at the same time, it's expected, and kind of just, that's the reality of the way things are now. More volume is just way easier to kind of manipulate. That's the game we play. that being said, there were plenty of backside opportunities. However, front side losses could and generally were substantially high. So that meant if you ended up catching the backside from the same perspective that I had, you would generally be recouping losses or having smaller wins. And so it was a real brawl. It was a real fight. And majority of the time, I was really just dealing with that situation. Now, there are a lot of people who take advantage of those opportunities and have so much patience. And to them, I applaud them because that's the right thing to do. However, in most markets, like that's not really going to work all the time because they're going to miss a lot of opportunities. So it is a trade off, and it is definitely a market environment sort of thing. Like, again, just going back to you guys, everyone's strategy is going to perform on different levels and different environments. Just because anybody's saying, oh, this is my best, whatever, this is my best, doesn't mean like they were also representing their worst during the other months. So you're only seeing one side of the story. And I remember I listened to Michael Martin's podcast the other day, and he said, if you derive your system from like systems you see online, you're just going to get the worst of everyone's system. So the power of trading is really just developing your own style, your own go-to, your own fundamental basis, understanding exactly what the flaws are, what the benefits are, what the fluctuations are, and what markets are best for you. And just learning that inside out. That would be how I would say you should go about it, and not to be distracted. Now, if you allow yourself to be distracted, that's partially your fault because, yeah, I mean, sometimes it'll slip through, but in reality, I think you should just mute whoever like makes you feel some sort of way, because it's not your journey when you're following all these different people and being influenced by it. Just keep that in mind. All right, so of course the stats look really crazy. Like, oh yeah, it's your second best month. That's great. But how did that actually play out? Well, I had really bad time during this month, really bad time. The third week though was what I call like a Pareto week, just because I did the math on it earlier today when I was with my friend. And I realized 85% of the gains I made that month were from 3 days. Now I don't count the first week because it was part of June's like final week, so I just started from the second week forward. So out of those 20 days of trading, it's about 15% of the month was 85% of the gains, which equaled my second best month in P&L. So to me, that was really crazy. And that also just kind of reinforced like everything that I was working for, because I did not bend, I did not break during this time. I was fighting all this, garbage action in my mind. It's probably great for someone else. Being resilient, remembering like what I had learned, sizing up, sizing down, earning my size back, and I finally paid off in this 1 week, and I was like, yes, this is it, Then following week is a week from hell. I literally fought like a dog. Most days it's break even, small red, and you know what? That was the system's maximum capability, which was the crazy part. Like literally being small red or break even, I was happy with that because I performed well. So some other people were not so lucky, and I'm sure got roasted on some of these very volatile moves, and I'm sure some people took some pretty bad losses. And you know what? Like, it was a mental battle. It was a psychological battle. So if you made it through that third week, I mean, damn, that's impressive. You should be proud of yourself, just like I'm proud of myself. And I will say during one of those days, it was so challenging. One of the I'm very, stable as a person and emotionally very level, but like I did tilt on one day. I did tilt. But instead of fighting, what I did was I just shut the whole thing down. I said, hey, you know what? I'm ending it today. I'm going to come back tomorrow. And that was a wise decision. but that happens extremely rarely. I don't think that happens to me very often at all. Um, just to kind of illustrate for you guys, going through the same thing. Then following this, everything started failing again. We went to a bearish cycle, no volume, not much plays, and that pretty much wrapped up the month. I mean, we don't know what's going to happen in August, but hopefully, historically in July, August, like things start to pick up from the summer, and who knows what's going to happen. But either way, I have learned to kind of hold my ground, be stable, size down, be humble, look at my systems in a different light, like be more comfortable with the pain and understanding like the good times will come and I will be there. Now, there is one more takeaway from this month, and I will revisit again, but just to tease it, it's just that the market's a little bit different. I'm not saying it's completely different. There's still a great amount of edge, but like I kept saying, levels break out, and understanding exactly the moments when your system currently does not work is the moment to flip your system either to the opposite direction, but in my opinion, better yet, to just wait out the action and have a later signal. The key it really is to avoid taking the front side losses that normally would work, that are systematically correct. Kind of switching your mindset at the moment where there's a breaking point in the activity that you kind of wish to see in the pattern. And I haven't achieved this yet, but I'm working on it. If that's achieved, then all of these opportunities will in fact pay out really well. And that's the difference between different systems. Now, it's a completely different strategy per se. So for me, that's going to take some time. And but it is something that's very necessary because the market in fact has changed. Like, you've seen so many really crappy companies, I would say, getting so much hype and so much volume that they will spike and then inevitably just crash, So it's not like you're wrong necessarily in your thesis, but adapting your system to that is going to be very important, because unless the SEC comes knocking and doesn't look like they're gonna, we're living with this reality for quite some time. And you can see that everywhere, just the unregulated crypto market shitcoins, the influencers pumping them, dumping them. It's not really any different here. We're pumping, dumping these shitty stocks. And if you're a systematic trader and you're taking all the opportunities the way that you meant to statistically, like that might not always present the best results, just because I always like to say that no matter how good your system is, the market will be influenced by individuals and larger groups. And so like if people want to chase something beyond the bounds, then you absolutely need to respect your stop and just say, hey, I got bested here. But it's not like your system is incorrect. It's just people exaggerating moves or things being exaggerated for different reasons. So that's my little rant about that. Okay, so wrapping this up, kind of takeaways, lessons, insights. So process, what got you here today? So I remembered a lot of things I shared online. I realized that I had to stem the bleeding. R compounding was very important to me. I kind of pushed it to the side because I had developed a new insight in just freezing the R and not growing too hard, because growing very significantly was part of the reason why I blew up in the first place. So I want to be very wary of that, especially as I'm encroaching on very high levels. So for me, that was very important. But I certainly could have been sizing down as well into adversity, and I had learned during this time that is literally the best way to do it. It helps your psychology so much. It helps you stem the bleeding. It puts you in a position of power where when you're losing, you're decreasing the amount that you will bleed, so that when you're winning, you will be at your best when you're winning, and it will show, and it'll be very quick. And it's like the thing. It's just the thing about so mind blowing about June, which is I'm profitable despite being down in R's because of compounding. It's so powerful. And one little thing that I didn't say before is it was interesting to me that the R compounding is the I remembered the gamification of it all. Like when you're increasing your R, it feels fun. It feels like you're improving all the time. It's a game and it's inspiring, right? And you almost it almost your system almost speaks to you and almost tells you like this is what the market is giving you, and is the good market, it's a bad market. You can feel that in the pulse of your P&L moving. It's really crazy. But the other thing which was very interesting to me was I actually liked adjusting my max losses and my risk down when I was losing. I felt like I was doing the responsible thing. I felt like I was doing the right thing. And I had not felt that for so long. And I do remember this, but it's something that I'm going to take with me from here on out. And just, I'm never going to leave this part out because it was so impactful on my system today, and I know it was so impactful on many other systems because I get DMs almost every day of people hitting new milestones, like using these different ideas and techniques. And I remember those days, and no matter how good you get, like there are fundamentals to why that happened. And for me, this is one of my fundamentals. These are one of my core pillars. And on the speaking of pillars, like your baseline, identify what's your baseline. So I always tell people, like, you don't want to start adding to your system, because what happens is you could go through 2 months dry spell like me, have a really shitty month that pulls you back hard, and not everyone has the mental capacity to come out of that, especially when they haven't built their baseline. I know that if I had to restart over with 30K, I could do it all again, or even less. I don't know, but I could do it all again. It is a skill. And how did I build that, experience? It's through time, and it's through work, and it's through going through the levels one by one and not skipping levels. And, I'm trying to be that word of caution for you guys, because I was the one who did not have the word of caution from anyone and blew up his account. And I don't want that to happen to you guys, you see? And I want to be the example of the person that shows you with conviction and can also, speak to you in a very genuine way through experience that this is the right way forward. We all know the cliches of trading. We all know to take it slow. We all know the process. And I'm trying to break down, what does that mean? And how does that affect somebody? And it affects you in every level. Okay. So build that baseline, understand what got you here, so that if things go wrong, you can come back to it and continue growing. Okay. Now, growth isn't always progress, and growth takes time and samples. So just because you're adding onto your system, just like me, I know the limitations of what I'm pushing, and I took the risk. I took the gamble of saying, hey, I'm not going to stay at where I'm at. I'm going to keep pushing the fold, and whatever comes with that, that's what I'm going to accept. It just so happened I struck gold at the right time in February, and that was exaggerating how much faith I had into it. And I let it run for a while. I let it run through a pretty deep drawdown that I have not experienced before, and you can see that reflected in the equity curve. I mean, had I stuck to what I'm doing, yeah, it would just go up straight. Seriously, even in a bad market, it would not have pulled back really hardly at all. I would have just broke even. I would have probably been green on some days, and that doesn't mean that it was bad. I felt comfortable taking that. I don't really have to worry about money for it in my business. Like, I'm willing to take risks because I've gained that privilege. And the other thing is, growth takes time. So if you change something, you can't just flop over the next day. You can't flop over the next week. It takes samples. And for me, like, having executed my system, like, I was fully willing to take months of beatings, different ideas, different experiences. And, ultimately that's kind of how I concluded this last chapter of my trading journey. And, I got the sample size to realize like this doesn't work and I need to pull back a little bit, but not entirely because there were some good things about it. And that's just the way it goes. And if you're not like in that position to take those risks because you're building your account, you're newer, or it's too substantial, or you just can't control yourself if things happen this way, then yeah, be careful. Um, and also, I could stay at the level I'm at and I could have a great, great life. And, I know everyone uh, thinks about it. It's like it's greedy, but the reason why a lot of traders are here the way, they present themselves today, or, where they are in their journey, is because traders are people who love to grow, and we're no longer competing against the 9 to 5. We're competing against ourselves, and we're competing against trading at large. And trading is something that's exponentially, uh, it's an exponential game, and there's so much opportunity out there that I just I don't want to miss out on that. I want to. It fulfills me, and so that's what I do. And there are people way bigger than me, and I want to see what I can do. And just because, and when you take that decision, when you make that choice, especially at a certain level, you have to forego different opportunities, and you have to forego like different things that you could get away with before, and you have to master really the basics. You have to master um, liquidity, and that's something that the short bear talks about a lot. He hasn't posted too much recently because he's doing his own thing, but if you just go back on his tweets, you can see like how the mindset of someone who's great, and again, going back to that, like learning from great people, fantastic traders, like that's somebody you want to learn from. Like you don't want to learn from the guy who just became profitable, or who trades small size, or like even someone who just makes like 5 figures. Really, I mean, like it's impressive to a lot of people, but it's not impressive to people who actually trade, and like people who trade for a long time, experienced traders. And even the person who just had like his breakout year, whatever it is, like they have so much to learn. I have so much to learn, but there are examples of people out there like Maggie or Short Bear who have been somewhat transparent, or more transparent than, and have kind of more or less proven their legitimacy. And those are people you should try to learn from, because again, you shoot for great, you're going to land somewhere in between. And just like the quote I always like to say, shoot for the star, so if you fall you land on a cloud. And everyone wants to believe like they can mimic another person, and everyone always overestimates their own ability. That's just a human nature. Like over 75% of people believe they have above average intelligence, but that's not really reflected in society. So generally speaking, you want to aim high so that you adapt those mindsets and the insights and the knowledge of these people, like the actual people who are far beyond where you want to be. So that's my advice there. And as a result of growing, less becomes more. More, you want to look for those better setups, and this is not applicable to everybody, but more or less like it's true. Finding those better setups, ignoring more of the crap ones, and raising your standards. Less is just the reality of this game. And um, as you see, like literally 3 days of my month, I could have just quit for the rest of the month, and it would have been great. It would have been my second best month ever. Like, things like this. Like these are things that I'm still navigating, but it's pretty much showing up very truly, from what you hear from a lot of the big traders as well, or like the legendary traders rather. So there's that. And I can't wait for a good environment, because I know I'm absolutely going to crush it. absolutely gonna crush it. But at the very least, I can deal with all the pain and tolerate it, and hopefully, you guys don't have to learn it the hard way like I did. So I did kind of talk about the cocky traders and aiming higher, so we can skip over that. Um, and again, how you lose is what defines you as a trader. Like these times are so much more meaningful to me than the winning times. Like I don't know, someone was confused the other day where they're like, "What you when you win, you say like you're not learning as much." Like he basically said, "When I win, I analyze it, but yeah, everyone analyzes it. That's what good traders do. They review their trades, they learn, they grow. Like yeah, that's a given. But the thing is, nothing is gonna put a fire in your ass more than taking a drawdown or taking big losses, because that's what's gonna get you working 20 hours a day, 16 hours a day, working into the night, staying up, focusing on it all day. Like when I win, I just have dinner and go to sleep. You know what I mean? If I lose, I will literally not move my ass until I have a plan of action, or I have reviewed, or I have gone through back tested months, or you know, understood exactly what's going wrong and growing from that. Like every drawdown that I've ever had has been one of the most pivotal moments in my career and has catapulted me to the next level. And that's something that I've told a couple people during this time. I got a lot of DMs about, hey, this is a hard market for me. And that is exactly what I want to, you know, tell them is look, it sucks right now, but if you can grind it out, these are going to be the powerful moments in your career, 100%. And lastly, I'll be at Traders for a Cause this week, or in October. Sorry. I'm looking forward to seeing you guys. We did between Bryce and myself, we gave out 4 tickets. Bryce added on +1. Paid out of my own pocket, and I just there were just so many great stories. I couldn't just pick one. So you guys know who you are. It's very special. But at Traders for a Cause, I may or may not be involved. So look forward to that, guys. I'm trying to work that out, and it's something that I'm really excited about. So that's a little bit of a hoping for the best, but something to be excited for as well in the future. And that's pretty much it. So thanks, guys. I got thanks for SlidesGo. I found this on the internet. I like the way that the slides looked. And of course, if you have questions, you can follow me at Brian Lee Trades on Twitter, or just send me a DM or send me a notification. Let me know what you think. Let me know how your month went. I polled a lot of people. I polled great traders. I polled noob traders or intermediate traders. I polled everybody. Not only on my Twitter, but I actually asked people. And the general consensus is that the month's been pretty dang hard. And for some people, it's been great. But look, like everyone has their own market, and I understand like the opportunities were there. So I'm just sharing my experience. I know a lot of you probably can relate, so that's why I do it. And I hope that this chapter was really enlightening and inspiring for you guys. And I'm really happy with the story that I was able to tell, and like living that in the moment. That was one of the things that brought a smile to my face, just thinking about like how I was going to get out of this situation, what I was going to learn from it, and inevitably being able to share that with you guys, because it's not my first rodeo. I mean, I was in a lot of mental pain, but it's not really that big of a deal in the grand scheme, and I knew that. And all I was focused on was really just, can I perform at my best? Can I live up to my best? And where can I go from there? So with that said, you guys, there's nothing else to speak to. So thanks for watching, you guys. And I hope we have a great August and moving forward.